Okay. 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 All right. Hi, ladies and gentlemen. Welcome to Bulls versus Bears, a strategic market forecast. My name is Dr. Greg McLeod, and we've got an exciting program for you this Thursday. It's Coffee Hours with Greg. Big hello to the $50,000 challengers, and also a big howdy do and a big shout out to the Pip and Run floor, trading floor. Okay, guys, so we're gonna get started, and we're gonna make sure we have a recording going so we can make sure we can get this out to you. Let me go ahead and get the recording going, and let's go ahead and close some things out here. Yeah, and it's a fabulous Thursday here in Las Vegas, and we are working on. The markets are very volatile after the CPI announcement we had, where inflation's actually on the back foot, which is seems like it's a good thing for the market. The market is taking it very very good. Um, okay, so let me go ahead and share my screen, and we can go ahead and get started with our program. We're using some pretty new systems here, and to get them everything all working out. But yeah, we've been having some great success as we come to our fourth week or third week in the $50,000 challenge, which is fantastic. We've got a lot of people signed up, very excited about what's going on in this new challenge that we've got going on. And in this challenge, it's a live trading challenge. It's live. It's using your money, right? You say, well, Greg, I want to use my money. I want to use a prop fund's money. But you're not really in a prop firm. You're just using a demo account. You're not using real money. You can't cash it out. You're basically wasting your time or spending a lot of time. I'm not saying wasting your time, but you're spending a lot of time trying to pass a demo challenge when the demo challenge is kind of stacked against you. You maybe buy a $50,000 demo account to trade, and you have to make 8% on the 50,000 when you don't really have 50,000 to work with. You really only have 8%, right? Which is like maybe $4,000. Okay, the trick is that they want you to make 8% of the 50,000 when you don't have 50,000. You only have the 8,000. That's all you can risk. If you lose more than 8,000, the 4,000. If you lose more than the 4,000, then you're out. Okay, so you really have a $4,000 demo that they want you to make $4,000 on, which is 100% return. And that's why so many people fail the challenges, because they don't do the math. Most people don't do the math, right? But in this challenge that we have, my challenge that I run myself is that it's your account. It's a live account, your account, using a $50 account. But guess what? Depending on where you live in the world, you can have 500 to 1 leverage. That means for every dollar that you put up, you'll have $500 access. So let's do a little math here. 500 times 50, you have a $25,000 account. You can control $10,000 worth of currency for maybe just a few dollars. Okay, that way you have the magnet. Now, leverage is a dual-edged sword. You get magnified gains as well as magnified losses as well. Okay, but the thing about it is, it's your money. We've had one guy in the challenge, and he made like $1,600, and he fell short of the $50,000 challenge. But guess what? He got to keep the $1,600 because it was a live challenge. It was a live challenge in his account. So the goal is to turn 50 into 50,000, but he made $1,600. So he get to keep the 1,600, start again next month. You know, Our entry fee is like $147, or take the year for, you get the full year for $1,400, and you get to trade with me 3 times a week, for 2 hours, look over my shoulder, use our AI tools, our support group, the Samurai Sword system, the methodology. We create a whole ecosystem around this live challenge. And guess what? It's live, so it's your money, right? It's your money. And so you can withdraw it anytime you want. And in fact, you don't have to pay 80, it's not like 20%, keep 80% of the gains. You keep 100% of the gains. They're your gains. It's your money, right? So if you make $5,000 during the challenge, you don't give me anything. It's yours, right? And there's not a lot of hoops. You can withdraw it anytime you want. You can withdraw it in the middle of the challenge, right? We've had guys do that. They make 10,000, they pull it down, because the challenge is really between you and your account, and we keep track of it, but we give you the support. So anyway, check it out, the $50,000 to $50,000 challenge. If you're interested in hearing more, go ahead and drop, challenge in the chat box or in the comment section, and we can get you going. Okay. Let me go ahead and get this out to our people. We got a live stream going on to make sure that our people on YouTube can see it as well. And make sure that they are, I'm just still, computer's a little, the computer thinks it's weekend already. It's like, it's coffee break. I think the whole idea is that the Dr. Greg McLeod's personal meeting room, what's going to go? This is Bulls versus Bears, the weekly Forex forecast. Bulls, okay, versus Bears, forecast. And this is for 7/16, 16, and 2026. Okay. And okay, can we get some higher resolution? No, let's do that. Okay. So good to be with you guys. I'm so happy to see you here. I'm happy Thursday to you. Happy Thursday out there to YouTube, all my people on YouTube. And if you are on YouTube, make sure you like, you subscribe, and you also go ahead and pin a comment in the, go ahead and give us a like, and tell us where you're from, and tell me where you're from in the chat box, and let me know what do you trade and where you're located. Okay. And again, welcome to Bulls versus Bears, the weekly Forex forecast. Let me go ahead and share my screen and get started. Let me do and okay, and share screen, share. Sharing is caring. We're going to share screen too. We're going to share some sound too. Share. Okay. All right. Here we go. Bulls versus Bears. The strategic market forecast is on now. Okay. And let me make sure you make sure that you read the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. And remember, this does not constitute any type of investment advice. Make sure you consult with your investment advisor to see if this is suitable for you. Okay, let's move right along here. Okay, and and Mr. Slide. Okay. We got a little spinning wheel. Spinning wheel keeps on turning. Oh, there we go. Alrighty now. Computer's having some fun. Okay. Okay, so our agenda today, we're going to be looking at the euro, the pound. We're also going to be looking at the economic picture. We're going to start with the economic calendar as soon as we there we go. The Gold Rush blueprint. Hey, gold is hitting some lows after hitting a high of about $5,600. In fact, Goldman Sachs has put a 2027 price target of gold for $6,000. Doesn't look like it. Looks like we're going to hit 3,000 before we hit 6,000. You let me know in the chat box. Do you think gold's going to hit 6,000 in 2027, or do you think it's going to go down to 2,500 in 2027? Remember, gold is a hedge against inflation, and inflation has been going down. So what's the deal, right? And there we go. there's our agenda: dollar index, euro, dollar, pound, dollar, Aussie dollar, dollar yen, dollar CAD, gold, silver, oil, the S&P 500, the economic news, world news. We'll start off first, and then we'll go ahead and we'll wind it up with some crypto. How about that for you crypto dudes there? Oh, I don't want to see me. Let's go ahead and go to the charts, right? We're going to start with, actually, we're not going to start with the charts. We're going to go to my market heat map, arrangement of currency pairs by percentage change, so we can see what's hopping, what's popping, what's dropping, what's not in the market. And I have to stop here first. And then there we go. These are our cool group there. Alrighty then. Okay, coffee hour. Yeah, $50,000 to $50,000 challenge. We have a great challenge going on right now. The July challenge is wrapping up, but August is starting. So if you're interested in joining the $50,000 to $50,000 challenge, where it's a live market challenge, not a demo like Apex or the other wonderful companies out there, but this is a small account challenge where we take your $50 account and we scale it to $50,000 in 30 trades using our proprietary spreadsheet. So if you're interested, go ahead and type challenge in the chat box below to receive more information. You chat with me. You want to get on a call with me, I'll show you how this actually works. How can you take $50 and turn to $50,000? And we have done it. And so I want to be able to share this opportunity with you. We do a 30-day challenge. The next one starts, July is almost over, but we have an August one coming up. And so if you're interested in being part of this challenge, being able to scale a small account with low risk, with a high probability strategy, the samurai sword strategy, and have my help live on air watching over my shoulder, then go ahead and type challenge in the box below. Okay, so let me go ahead and let's go to my market heat map, our top secret tool here for finding trading ideas. You have access to it for free. Just go to mymarketheatmap.com, and normally it's $19.99, but you can scroll down to the bottom and you can have access to one of 6 powerful heat maps. We have the Kiwi dollar, pound dollar, Aussie dollar. This is great. If you don't know what to trade, you can come here. If you're trading Forex and you want to know what to trade, you can see green is an uptrend, red's a downtrend, gray stay away. You see what's hopping, what's popping, what's dropping, what's not in the market with color code. I'm a big guy. I'm a big color and shapes guy. I like green is up and red is down and gray stay away. And look at the Kiwi dollar up 3.61%. It is on fire. They raised interest rates. The Reserve Bank of New Zealand raised interest rates, and then it's been on fire. Also, we had some powerful releases from UK with GDP, and we'll talk about that too. But I want to focus now on the economic calendar, because the economic calendar is the underlying driver in the Forex market. Okay, a lot of people ignore the economic calendar. They're not, we got shy away from numbers and things like that, but I'm going to keep it real simple to you. I call it fun with flags, not fun with flags, but fun with flags. And what we're going to do is we're going to just look at what went on. I'll show you how this actually works. So Greg, I don't understand economics. I don't understand this stuff. It's confusing to me. I look at the flag and then I look at the number and then I see, okay, guess what? This is probably something that's going to drive it, make it to go higher or lower, right? That means all the other currencies are probably going to be flat or boring. But look, GDP was higher than the previous number, 1.3. It did beat forecast, but we also have GDP. Well, GDP stands for gross domestic product. Gross domestic product is the output, the economic output of a country, right? It's like our scorecard. When we see high GDP, it means the country has good employment, good sales, retail sales, the manufacturing and production, economic activity. It's red, but it's higher than the previous. The previous number was 1.1, so they're on an upward trajectory. It just missed forecast. Okay, and that's why we have the pound in the second spot. A 2.12%, a 2% move in a currency is huge. 3% is monster, right? 3.5% move in currencies. Normally currencies move in a range of about 0.3, 0.4, 0.2, but this 3.63 and 2.13 monster moves. Why? Because of the economic calendar. If you aren't looking at your economic calendar, you're missing out on a very important part of your Forex analysis. Okay, and we're going to talk more about that. In fact, I want a big shout out to Rodney a trader out in Dallas, Texas. He wanted to find out more in our school community. He said he wanted to learn more about news trading. A lot of people are voting for that choice in my free school community. In that free school community called Pip and Run Trading Room or Elite Traders University Room, you can actually have you can have access to webinars, free materials. And so go type Pip and Run and go to the school community. I won't go there now, but I'll show you at the end the resources, that free resources I have available to you to help you become a professional trader in 30 days or less. Okay. So here we go. Good. We have news here. We have GDP month on month. It was negative 0.1 was the previous forecast call for 0.1. So it's higher. 0.1 is higher than negative 0.1. And we got a big bump up in the British pound. Retail sales in the U.S., well, it was 1%, and it dropped to 0.2. Dollar getting cooked. Initial jobless claims, 216,000. Forecast call for 217 is actually better than expected. Not as many people applying for jobless claims, okay? Now, we do have some data. We have inflation data coming out of the Eurozone coming out. And so guess what? Look at the flag. So that's what we want to trade. We want to trade the euro because if these numbers come out good, or bad, it really doesn't matter. This is where the party is going to be. It's going to be in the euro. So if you're trading, I want to trade the Canada yen because it's my favorite. And nobody cares. Nobody cares but your favorite. You want to look at the economic calendar, look at the flag, and trade the flag. Okay, trade the flag. I think that'll be a good website, right? TradeTheFlag.com. So I got the flag, right? And then housing starts to come out too, and we have Michigan consumer sentiment. And then the other flag I would trade too is the dollar yen. Dollar yen is like the opposite of the euro because it's the dollar or dollar CAD. These are currencies I would look at. We have housing starts coming out Friday too, and that's a high one because if America's building houses, you need floors, you need roofs, you need equipment, you need refrigerators, you need appliances, you need all kinds of stuff. When a house is built, there's a lot of economic activity that comes from building a house, and that's why they look at how many houses are being built in the country, right? Because you're going to need all the construction workers, the plumbers, the electricians, all those jobs and all the things necessary to build a house affects the economy. And we're looking at an increase from 1.17 to 1.3. There's a forecast. And so U.S. dollar, the flag is there. And so that's what we want to trade. We'll look at dollar yen, dollar CAD, and the euro because it's called the anti-dollar. Okay. So anyway, so this brings us to next week. And that's what the bulls versus bears is to the weekly Forex forecast is to look at economic events for next week and then plan accordingly because he who fails to plan plans to fail. Okay. So here we go. We got Monday. We got lots of CAD. Look at all these. Look at the flags. Well, gee willikers. That's the maple leaf. That's the Canadian flag. That's our neighbors to the north. And so we're looking at, we beat their hockey team, by the way. So guess what? We're going to look at dollar CAD as a currency, CAD yen, CAD Swiss, Aussie CAD, Kiwi CAD. CAD is going to be in play, and so we want to look at trading the Canadian dollar. Now, not trading like exactly. The announcement was going to be at 8:30 a.m. during the U.S. The New York North American news cycle, and so we want people to wait maybe an hour or 30 minutes after that announcement. Okay, I'm giving you a little tip here, a little pro tip. You don't want to be out there 8:30 trying to trade this because the volume, the liquidity drops because professionals are standing on the side, and it's going to be like amateur hour back and forth, a lot of volatility. So you want to wait about a half hour after it settles down, after these guys actually read the core inflation report, the CPI report, the inflation report. They actually read these reports, right? And then they determine where they're going to take the currency, whether this is bullish for the Canadian dollar or bearish for the Canadian dollar, okay? So this tells you what to trade, okay? So if you want to trade Turkish lira, Japanese yen because it's your favorite, no, because they don't care about your favorite. All eyes are going to be here. And liquidity is going to be in the Canadian dollar during this time. And so now you have a very good opportunity to look for trades on Aussie CAD, Kiwi CAD, the Canadian dollar versus the Japanese yen. All these currencies that you can trade during this time, which will give you a higher percentage, a higher chance of volatility is our friend, right? Volatility, the news is like wind in our sails, and we're like captains of the sailboats. Without that wind, we don't go anywhere. So the wind that comes from the news actually will move our boat across the water. We just got to be able to make sure that we're going with the wind and not against it. Okay, Tuesday, we're going to have some UK data. That's the claimant count. Claimant is their employment data, and we see that it's going to maybe drop, predicted to drop from 31.2 people collecting unemployment benefits of 25,000. Unemployment rate supposed to remain steady at 4.9%. Again, big numbers on Tuesday, July 21st, trading the pound. I'll be looking at the pound. Will you? Okay. Then we have the German flag, which is part of the Eurozone. The Eurozone is like the United States of Europe, where a number of countries have a single currency instead of having. Can you imagine if we had multiple? We did at one time in United States history, or we had every state had their own currency. So, you have maybe, New York had their currency and South Carolina had their currency, and they had no way of exchanging money together. So we were able to get, together and have the dollar that we have. We take it for granted, but we had multiple states with multiple currencies. So that's what they did. Germany gave up their Deutsche Mark, right, in favor of the euro. France got away from the French franc and went to the euro, right? And you had a number of countries, Spain with the peseta, and they went to the euro as well. So they're the United States. So now they're an economic bloc, right? They have individual sovereignty like states in our country, but they are part of the European Union. So if you see this German flag, you're going to look at the euro because you're not going to find the Deutsche Mark on the exchange anymore, right? So is the EEW economic sentiment supposed to rise from actually drop from 10.5 to 7? That could be bearish for the euro because the currency is a scorecard, just like a stock certificate is, and the price of the stock is indication of the strength of a company like Nvidia, or Microsoft or Meta or Google. Those are stocks and companies with stocks, and the stock certificate even looks like our currency looks like a stock certificate if you've never seen a stock certificate. And so when the stock value goes up because of the company's output, then you get it rise in the price. Just like if we have a strong country, well, then our currency will usually go in upward momentum as well. With balance of trade out of Japan, that is going to actually get worse from 378.7 billion to negative 700 billion. And that could weaken the Japanese yen, causing Aussie yen, dollar yen, pound yen to go higher. And that's it on Tuesday. That's going to be Tuesday evening. Wednesday, we're going to have more inflation data out of the UK. Inflation rate supposed to drop from 0.2 to negative 0.1. Inflation rate year on year is supposed to drop from 2.8 to 2.4. Core inflation, that's inflation without, when you say core, they extract or take out volatile food and energy, and they actually just look at everything else. And that's supposed to rise slightly from 2.6 to 2.7. And core inflation month on month is supposed to drop from 0.3 to 0.2. And after having a spike in inflation due to oil, oil prices going higher, fuel prices, diesel prices for transporting goods and services, if all that goes up, that creates inflation. And when there's inflation, people might not buy. And so when they don't buy, prices eventually have to fall after an initial inflation spike. So we want to see if the inflation is down, then we might see a drop in the currency because the central bank, or the Bank of England, our central bank is the FOMC. They either raise rates in order to tap down inflation or lower rates in order to reinflate the market. And so if there's no inflation, there's no need to raise rates. If there's no need to raise rates, then the currency doesn't appreciate. Okay, so that's that cycle, that life cycle. Let me know if you're tracking in YouTube. You're tracking. Go ahead, type tracking in the chat box. Let me know that you're following this, right? All right. And then on Wednesday we have unemployment, lots of Australia data. So I want to trade the Australian dollar. That's the Australian flag. It has the Union Jack with some stars in it. Looks really pretty. And unemployment rate there, 4.4%. Full-time employment change, no forecasts given. All I want to do, don't even worry about the numbers. I know sometimes you guys see numbers and you kind of like freak out. Just look at the flag. So that's going to be about 9:30. You know, I trade Tokyo time. In fact, I'm going to be trading it with my group in the $50,000 to $50,000 challenge. If you want to know more about the challenge, right, type challenge in the box, and I'll give you a link and we can talk about it and tell you how the challenge works, how you can just use $50 to scale up to $50,000. If you want to know how, go ahead and drop challenge in the chat box and I'll show you how. But I'm going to be trading the Australian, one of my favorite currencies to trade, and so it's going to be on fire, happening on Wednesday. Okay, so you won't be able to join because it's July and we're almost done with this challenge. We got another week left, but I can do is send you some videos or some content and talk to you about how I actually traded this and how our group traded this and how we were able to move down our spreadsheet to the $50,000. Okay, on Thursday we have the Eurozone marginal lending rate. And then the ECB rate decision. This is one of the biggest drivers of currency movement is interest rates. So when the central bank raises or lowers interest rates. So the euro is going to be in play on Thursday. And so they're looking at keeping rates unchanged at 2.25. I want to tell you a little secret here. They either have a choice. They can either raise rates, cut rates and make it go lower, or they can keep it the same. But keeping it the same is the same as raising rates usually. We have some central banks that will keep rates unchanged, like the Bank of Canada kept rates unchanged, and the Canadian dollar appreciated. Okay, so just because it's unchanged doesn't mean nothing happens. Unchanged means they don't cut, right? When people are expecting a cut, which means that people want to put money into that currency as because hey, you can get 2.7% or 2.4%. They're expected to keep rates unchanged at 2.25%, right? I know they have the deposit rate 2.4, and they have 2.25, right? Deposit rate facility. Okay, so they have two things going on here, but if they do keep it unchanged, right, because of the weaker inflation, then it's still going to probably act like a hike, and we could possibly see a move higher in the euro. Okay, so that's going to be huge. We're going to have retail sales out of Canada, more retail sales, ex autos. Okay, and then the Canadian dollar is going to be in play. Let's look at the flag, right? So we want to trade Canadian dollar currencies on Thursday, and then we have ECB press conference after they hike the rates. They're going to explain why they did it and answer any questions around it. Then we have inflation rate year on year out of Japan. It's supposed to rise from 1.5% to 1.7%. And Japan, they're in a tough spot. They import 99% of all their energy, right? They don't produce oil, and their currency is depreciating, at 40-year lows against the major currencies. So they got to do something. And so if their inflation rate is higher, that's going to and the Bank of Japan won't raise rates. That's the thing about it. They because they raise rates, then that's going to also cause all kinds of problems for exporters. The exporters who want to ship their really cool, Sony PlayStations and Lexuses to the United States, their goods go up when they have a higher exchange rate. So they want to do that. Now you got companies that can't make any money, and you have inflation too at the same time, right? So you've got a double problem going on. Okay, let's go ahead and so let's keep going. S&P Global Services PMI 47.9, and then we have that's the Eurozone. That's the French flag, and then so the euro is going to be in play all Friday, right? Well, I'm not going to go through every single one of these. There's a lot of them, and also we have some S&P Global UK data, flash data coming out too. And so that's the British pound. And then we have S&P Global PMI flashes for manufacturing and services for the U.S. That's coming out at 9:45, and that's going to be our wrapping up this week for Friday. And then that's next week. Okay, so let's go right to the charts. We're going to transition to the charts. I know there's the fundamentals. if you're tracking the fundamentals, the type flag in the YouTube chat if you are there. Let me just see. I'm going to switch over the YouTube tab and see if anybody is there. We got. Might not do that because my computer is okay. All right, we've got a few people watching there. All right, let's go ahead and go to the charts. Okay. Okay, we're going to go to our a single chart here, and we're going to go to our yeah, this will work. All right. We're gonna start for our monthly chart, our top-down analysis. We're gonna start with the Dixie, the US dollar index. US dollar index is a basket of currencies versus the US dollar. And she is it's like, you know what? It's time for Nelly, time for a new computer. Or I needed to clean all the stuff off the hard drive. That's what it is. And all the tabs, you know. I'm making this really cool Japanese samurai video. This is pretty cool. You know, let me show it to you guys. It's pretty fun. All right. But let's yeah, it's the way of the steward. It's like there we go. There we go. Okay.
A choice we make is a seed planted in the garden of our future. True wealth begins with the care we give to the small things we hold. In the chaos of the world, a steady mind becomes your only shelter. To master your craft, you must first master the person in the mirror. Discipline is the blade that removes what no longer serves your growth. Protect your kingdom by standing guard over the values you hold dear. The path of the steward is walked with purpose and total accountability.
All right, that's our video on stewardship, protecting your account and being a good steward of your funds there. Okay, and we're going to get that going here. Bulls versus Bears, the weekly Forex forecast, and let's go ahead and where's our Bulls versus Bears? Hello, open template, and let's go to Bulls versus Bears. Okay. Okay. That's not blank. Yeah, remove all drawings and remove. Okay, there we go. We'll keep the indicators. Okay, so this is the dollar index, U.S. dollar index, and we can see that we had some higher highs and higher lows after you know we have a going way back. We've been kind of like we had a downtrend. We've been moving sideways through that downtrend, and that downtrend line has been broken here, and then broken here, and then broken here. And we just can't seem to. If we get above 101.90, we have a higher high. We're making higher highs and higher lows, right? We're just kind of stair stepping, kind of grinding out this uptrend. But we've been pulling back for the last several days. I mean, 1 day, 2 day, 3 day. We've been in a downtrend, and the other currencies have been catching up. We see euro catching a bit, and other currencies too. But the dollar has been it's in a pullback in an uptrend, right? Which means that this is a temporary drop. If we can't break the trend line, we can probably see a bounce, right? So that's just our daily. Our weekly is here, and we can see the weekly has been pushing up to indecision, though. We see the two dojis here. Past 2 weeks, we've had some indecision. Where do people want to take? Where do the traders want to take this? And usually we have this price compression. Two dojis, it's a tie. We can see this price compression. And with this price compression, we could probably see a break to the north side, right? So let's let us drill down to the 4-hour chart and and we are drilling down to the 4-hour, and we can see that we bottomed and it may have turned. This is our 200 SIP moving average right here, and we're moving up the last few hours there, right, with the dollar gaining some strength. If the dollar's gaining strength, it's going to be hard for the other currencies to rally. But let's drop to a 2-hour, see actually what's going on, and we can see that there is going to be, the dollar has been rallying, right? So bulls versus bears, I am bullish the dollar index, right? So let's go ahead and go to the anti-dollars, go to the euro, and let's see, the euro's our hero. And the euro is, it turned down. I'm going to remove all drawings. Remove all drawings there, okay. And we can see that we did rally to a high about 114.83, and we've been pulling back in the euro, right? And pulling back, let's go back to our weekly chart there and look what's going on. And you can see that that head and shoulders we have a very strong looking head and shoulders that's on this weekly chart that is playing out nicely, right? And so we're heading, you can see we have lower highs and lower lows. Head and shoulders is a bearish chart pattern where you have this shoulder, left shoulder, head in the middle, and then the right shoulder. You can see that. And that's typically a bearish pattern, right? And we can do some things to figure out like how far it could possibly go. We could draw a neckline. This is called the neckline. We can take a measurement from the top of the head to the neckline, and that gives us a projection target. We can take that, project that, and the projection gets pretty low. We look at a projection down to maybe the 107.95 area. That would be kind of huge, right? Would invalidate that would be a break above the right shoulder. And if we break above 118.58, right? But that's a weekly chart. Let's look at our daily chart. We can see it's kind of struggling with that neckline, right? So we might get a little bit of a bullish move there, right? In the near term, we do have the ECB rate decision coming up, so we might get a little bit of a thrust higher. And let's see how far that could possibly go using Fibonacci expansions, and we can see maybe it gets back. Maybe we could get back to about 115. Still be bearish in this downward channel. But so it's one of those things where you're like, okay, yeah, it's in a downtrend, but it's rallying up right now, and we're hitting some support, probably pulling back for the weekend, and then we might see an extension there. But I would also watch this double top at the 114.72. We break this trend line and break down below 113.78. We could see this, then we could start this target down to the 107 area, right? Because it does have a bear flag kind of look to it, right? If you really like a bear flag is like a hockey stick, and I propose maybe changing the name of bear flag to hockey stick, right? Because you got your flag, and then usually the flag will break out south from the way it entered. If it entered down, then it could exit out that way too. Bulls versus bears, I am bearish the euro. Okay, let's keep it going. Well, if we know where the dollar is going, if the dollar is going up, everything else is probably going to tank. So let's go ahead but let's see individually based on, like, we do have an ECB rate decision. We don't have rate decisions in any of the other currencies. So we might see some type of a reprieve, right? Let's look at the pounds. And she's loading. And then we can go, let's go out to our monthly chart. Let's go out to the monthly this time, and we can see, this has been hanging around, got this downtrend, and, this support, the support zone still hasn't been broken yet. It's a long way away. It's like 105. That's a low of like 2023, and then our Japanese gong there our samurai sword scanner give us a little bit. That's our alarm there, right? And move this over here. Okay, so this is the pound dollar. You can see that we're rallying up against the trend line. Go down to a weekly chart. We can see that we've just been basing kind of sideways, not really going anywhere. 130.59 to the south side. North side, we saw maybe 137, about 200 pip range in this this breakout channel. And so we might have already hit our 100% breakout target. No, I mean, it could break, if this consolidation is going to be an accumulation channel, and we could break north, right? I mean, we've been, we have a rising trend line, sideways consolidation. It's like 50-50. This is, could go either way. Um, we have this is what's going on here on the weekly chart. Daily chart, now a lot of we do have a nascent uptrend on the daily chart, higher highs and higher lows in the context of a larger downtrend. So we could come back and retest this 137 area again, because every time it gets down low, it comes back high. It's in a range. And so if you're a range trader, bulls versus bears, I am short-term bullish. So let's leave it at that. Let's not overcomplicate it. And this trade what we see, but look for a break of the trend line to actually indicate that we're heading lower. So bulls versus bears, we're bullish the pound dollar. Okay. And let's go ahead and see what's going on there for our dashboard. Take a little break here, look at the dashboard, and it's our samurai sword dashboard, and we can see that we had a number of currencies during New York session. Now, people who were part of the $50,000 to $50,000 challenge, when they sign up for the annual program, they get access to the opening range breakout, which signals all the breakouts that are going on and gives them a letter grade, tells you the range of the size of the breakout, the trend, and also the direction that it broke. They break up like confluence. When the breakout goes in the direction of the trend, well, then that's going to give us a more powerful move. It's a grade C. And then we have confluence here. We have where we have a sustained breakout on the euro, but maybe it's flat, right? So we have lots of information here. We have the Forex majors, all instruments, Forex crosses, crypto. Then you have broken up into individuals like Aussie dollar, euro, all the euro pairs and their breakouts, right? The pound and their breakout families, and the Kiwi dollar and their breakout families, and so on, right? And then we can actually go back to we can sort by grade, by instrument, and then actually let's look at one that's trying to find one that is. We can change the grade, the minimum grade that we'll look at. We also have Kenji, which is our AI picker. He'll pick ones that are very good, right? So let's look at pound Kiwi. We can click that, and you can see that it shows the range and the breakout, and we kind of move sideways from there. This is the other one we had. This is a beautiful breakout. This is a samurai sword. This is the sword. This is our breakout. Shows us that the breakout, and look how far we went from the breakout. It was a huge monster trade that we had in there, right? We had dollar yen. That's a C. And we can see, look at that consolidation. We got an alert right there, and then we took that and make money. So that's how we can move through that spreadsheet very quickly when we have these trades. These are asymmetric trades with very little risk. The risk is the height of the box, and the gain is what's after the box. So so we have a 1R, 2R, and 4R based on the average true range of a currency. The average true range, the average ATR is usually around 100 pips. We try to get about 25% of that range, right? That's a nice big chunk of the range. We're not going to get every single bit of the range, but we'll get a piece of it, and we can get 25 pips. That's going to compound very nicely, right? So when you actually look at our compounding spreadsheet, I'm going to show you. I'm going to give you a quick glimpse of that, and you want to take a screenshot, you can. Or what we do is we're able to multiply our gains quickly going through the spreadsheet, right? And there it is, right? This is the FTFK spreadsheet. So we can start $50, starting 0.05, 25 pips. right? We're gonna make $12.50. Okay, then 62.50. Then that 62.50 is trade number 2. It can be trade 2, day 2. If you took 3 trades in a day, well, then you can move down farther in the spreadsheet. We go from 50 to 62.50 to 80 to 102 to 130 to 165 to 210. By trade 8, we're at 267. Trade 9, 340. Trade 10, 432. If you paid 147 for the Challenger, 1,400 for the year, hey, you know what? You do this every month, and you paid for the challenge, right? Who's heard of a challenge that pays for itself, right? When you fail, you didn't get to 50,000, but you made $432. That's not bad, right? Had guys complain, oh, you made $300. You made 600% on your money. You start 50, you have 300. Be happy, okay? Not satisfied, but happy. Right, go from 432 to 550, 550 to 697. Trade 13, you're at $885. How many of you guys have made 13 trades and haven't made $885, right? 14 trade, you're at 1125, 15 trade, you're at 1430, and onward, trade 25, you're at 15,592. I know many of you who have traded Forex have made compound interest spreadsheets, right? But you got to have a plan of position sizing so you can take advantage of it. That means keeping your pips consistent and increasing your position size. So basically, you're doing the same trade. Remember, we're trying to get 25% of the range, 25% of that of 100 pips is 25 pips. You can see how it adds up if you position size, because I know you've made 30 trades and you probably have not increased your size in order to scale properly and use we call HAT, high asymmetrical trading, where the risk is very tiny and the gains are very big. Okay, so if you're interested in that, go ahead and type samurai or sword in the chat box or in the in the comments, and I'll go ahead and we'll talk about it and see if it's for you. Okay. Anyway, back to the program. Pound dollar. I'm actually bullish on pound dollar. Okay, let's go ahead and go to the Aussie dollar, one of my favorite currency pairs to trade. I should really just save it for last, right? Now let's go ahead and go to our monthly chart there. And there's our samurai sword. Remove all drawings and remove all indicators, right? Let's get to it. Okay, so here we go. We've got lots of support. Again, we get that, lots of strong support in this 5,900 area, right? Big pushes, and then but the 200 simple moving average is right there, 200 monthly average rejection right there. We're getting a little bit of a pullback, back into some moving average support. This is a monthly chart. Australian dollar. We're going to drill down. I use multiple time frame analysis, drilling down to the next time frame to see where the action is. And even though we got a pullback, we do have a little bit of life where buyers stepped in at that 68.56 area. And so we have a rising trend line, a rising weekly trend line, which is short-term, medium-term bullish, right? Because if we don't break that line and buyers are stepping in, well, we expect prices to at least return to 50% of the drop. We dropped from a high of 72.95, and we look for a maybe pullback back to 70.78. That's about 50% move, right? So let's see. That candle has a wick, so it's kind of suspect. But look at that, looky little brown cookie. We've got some bounces off of the moving averages, breaking through, and we're hitting that 38% retracement of this down move from the high that we had back on May 12th, 2026. And so we're seeing moves, higher highs and higher lows. Though we have a backdrop of a downward trend, we're retracing. Profit taking is strong on those for the bears, and the bulls could come back. And I am bullish Aussie dollar. We have lots of news coming up next week, lots of catalysts, lots of potential catalysts to move the Aussie dollar further toward that whole number, round number. We're at 69.98 or so, right? Usually we'll roll right into. I might pull a trade on right now, right? Yeah, let's go. I'm so bullish. I want to get long right now, right? Let's take a look at that, right? Yeah, we're at and then just go ahead and try. We could return to about half that. Let's say we can pick up like half that by like $10, right? So $10, and then I'm gonna put my stop loss. I'm gonna risk about $5 on that. There we go. All right. So that's how we do. We look at some support and look, we're in the money, right? We're in the 10 cents, 10 cents. Hardly nice 10 cents, right? Looking for a bounce, that bounce higher, right? Anyway, let's keep it going. I love Aussie dollar. 30 cents. It's going up. It's going up. Okay. And these Kiwi dollar is my next favorite one. And we can see from a weekly chart that it's kind of crazy, right? We got, look at this rebound from this area here, from this 57.15 area, from the lows we had back in November. We had a lot of congestion back in, back in 2025, back in February. And so basically trading the range. We're not, there's nothing really super exciting here. We're trading the range, bouncing off support, heading toward resistance, right? This is another one I'd look at to get long. I like this bulls versus bears. I am bullish. Yeah, just based on that. The daily, nice. You can see higher highs here. I know we were in the face of a massive downtrend, but even in downtrends, massive higher time frame downtrends, you get these these rallies, right? These rallies are several hundred pips, right? So even those things, oh, it's a downtrend, yeah, but it moves from 55 to 60. That's 500 pips, right? I don't know what bear can hold out for 500 pips, a big bear, like a big grizzly bear. But when you're going to the shorter term time frame, you're seeing that, hey, maybe you have some, look at that run that we had from the 1st of July to here. We went from 56.31 to a high about 58. That's like 200 pips that this thing's moved and look at little opening range breakouts right there. Look at that opening range breakout. Boom. He held that, boom, it shot to the north side, right? 4 hours kind of curling over, so we might get some pullback. Maybe look for some. Every time you get a big move like this, you expect some type of profit-taking decline. You can take your fib from the low to the high. You can say, okay, we might get some type of pullback. It might even be a possible short going on here, right? Or we can go to the 23% retracement at 58.05. And that's like 35 pips away from where we are right now. It might be a possible short, right? And then we might go long Aussie Kiwi. Kiwi might be something worth looking at. I'm looking at that Aussie dollar at 69.92. Usually when you're in the 6.9999s, it'll roll right into 7.0. Well, get about 8 pips might be pretty cool. But Kiwi dollar, we're pulling back 15 minutes, but we are approaching support, right? Approaching support. We hit the 11% Fibo, and we might have already, we broke out of a consolidation and dropped. In fact, this is our New York consolidation. New York. New York. All right. I don't know, get rid of that one. Get rid of that one. Yeah. So this is our New York opening range breakout, our samurai sword, and we can see nice breakout right back to support, right? Like key support, and we could probably see a bounce from here. But I think we get a pullback. Bulls versus bears. I am bearish, short-term bearish. Next week, though, a little bit more bullish. But I think we need to unwind some of this profit. Some of these guys who got long, guys and gals who got long and made a lot of money, they want to get their money out, right, for the weekend. So we might see Friday we see a pullback back to here. So bulls versus bears, I'm short-term bearish. Medium term next week though, I am slightly bullish though. Okay, so it's like, how can you be like that, Greg? It's like, yeah, I can. Dollar yen. Let's go to dollar yen right across there. And look at that opening range breakout. Look at these beautiful trades with the samurai sword. When you join the $50,000 challenge, I give you this indicator. You get access to this powerful indicator where, look, you can look at my chart and see where you're supposed to enter. If you ever have a problem, if you ever had the problem of what am I supposed to trade? How am I supposed to trade? And where do I get in? Well, you hear the samurai, the bell, the gong go off, right? It's very simple, right? If you don't know anything about trading, this is the system for you, right? Right there, that's a funky little thing, man. Let me redraw that like that. That's boom. That's your entry, bro. Right there. Oh, where am I supposed to trade? Right there. Right? Now the guy goes opening range breakout. What time do I supposed the opening? When's the opening? 9:30, right? This is New York. You got one trade, right? One trade, 2 hours, right? Boom, right? Let's look at that from that entry. That's your entry. Let me type that in there. What's the arrow for, Greg? It means entry, dude. ENTRY. 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 Well, where am I supposed to enter? Oh, come on, please. And people get, I know how people. When I was new, I would ask like crazy questions too. They're not dumb questions. It's just your brain has to adjust to new information. And while it's doing that, it may sound like duh, but guess what? After you do it a couple of times, right? It's like when you're driving. When I first drove a stick shift car, and my dad was teaching me. My dad is like the total chill teacher because he will take a nap. He'll sit in the front seat of the car and go for it. Go for it. What? He's asleep. Like I'm learning how to drive. I'll pass my driver's test. I'm shifting the first. It's grinding gears. It's bucking like a Bronco. Then he goes, oh, go downtown. Downtown LA with the hills? I'm putting it in the first gear. I'm rolling backwards. Car stalls out. I'm rolling back into a bus. And my dad's like, I'm going, Dad, I know what to do. He's like, oh, start the car. Get out of the, and I'm making a left turn. Oh, left turn on a hill with a bus behind me. Car stalls out, rolling backwards. My driving teacher dad is asleep. And, cars are honking. Brakes are screeching. And then I make it through. Praise God. Praise God, And then, but guess what? I can drive a stick, right? But you couldn't by that one event. It's like, oh, I quit. So this is not for me. Give me an automatic, right? So this got to be like that with trading. You have to be patient with yourself, and you're making some mistakes. But see, I had my dad because he would wake up and say, do this, and then he'll fall back asleep. But you guys got nobody, and you're doing it on yourself. And I applaud you for getting as far as you have with trading. Right? Maybe you had some wins, maybe you had some losses, but really you need someone on your side, someone you can look over their shoulder, or someone that can look over your shoulder, and that's where I come in, and that's why you should go ahead and type challenge in the chat box below, or samurai, and I'll reach out to you, and let's talk, and let's show you how it looks like. Look at how my 30 years of experience, 10 of it being as a Wall Street currency analyst, one of the largest forex broker dealers in the world. Yeah. It's like I'd rather learn from Michael Jordan than learn from, my Uncle Bob or something, right? So here's my exit, right? So that's my. So here's my exit. Going back to the samurai sword, right? Right, and we can take a ruler. But really, I want to show you is not just the amount of money you make. The money is great, right? But if you don't have an account because you blew up, that's another thing, right? But here we made 19.8. There's the 20 pips, 19.8 pips, right? So 19.8 pips, right? That's what you made on this trade. But how much did you have at risk? That's the thing you want to look at, right? So here we risked 9.3 pips, right? So the 9 pip risk to make, so it's a 2-to-1. This is a 2-to-1 risk to reward ratio, right? And that's where you want to be. Healthily, you want to be able to risk little to make a lot, right? This is asymmetric trading, right? High asymmetric trading, or HAT. You risk a little to make a lot. That way, if you mess up, if you get stopped out, you only have to be right like 20% of the time, 30% of the time, and you make money. And the way these trades, they're not the hyperactive trade that you normally see me do. These are chill trades. Like I got my chill shirt on. I'm gonna put that trade on, go to sleep, wake up, and then 2 hours, 3 hours later, I've made my money, right? I can move my stop up and trail it and do all kinds of cool things. Move my stop up to break even plus $2. And if I get stopped out, I make $2. And if I win, I make 20, right? So that's So that's how the samurai sword works. Plus, we have a bunch of AI tools that you can hear going off right now. Let's go over to Bitcoin, right? Oh, bulls versus bears. I am bullish dollar yen. Okay, dollar cat. I want to show you. Dollar cat opening range breakout. Look at that. Wow, so easy to trade. Again, the samurai sword is only the one strategy we use during our challenge, and we do very well at it. And I look forward to telling you more about it on a chat. Just book a Zoom call with me. Just type Zoom in the chat if you want to do that. Remove drawings, remove all indicators. Okay, good. Okay, let's get back to a higher time frame. Let's start from the top-down analysis and remove all the drawings here. And you can see that the dollar CAD has been on this tremendous uptrend. Even though they're a big producer of oil, they did not benefit from the higher oil prices, because of the internal political things, and economic things going on there. So we got the dollar CAD, the CAD, the Canadian dollar is been weakening on the monthly chart. They've got a little bit of a reprieve because we had the Bank of Canada kept rates unchanged, and that's probably why we got this little bit of a pullback, right? But it's a pullback and an overall uptrend, and so we would go back to maybe to a 4-hour chart, and we can see that we are already turning the corner. The bump that we had from the rate announcement, the Bank of Canada rate announcement is probably finished. It was significant, but we're coming back down to critical level of support. The 38% retracement is a very highly recognized Fibonacci that's respected, and we can see that price even turning before. People like saying, okay, all right, Canada, you've got your party. Now we're going to go back long dollar versus that, right? And so we're seeing that turn around. So bulls versus bears. I am bullish dollar CAD. And if we can get back half this decline, that'll be great. But I really think we'll get back to the old high, right? So always look for the half back. Half back is your first target. TP1. We're currently at 1.4052. I look for a move back up to 1.4135, right? So that's about 80 pips away from where we are. So that'll be a very good trade there, right? In fact, let's see what happened if we were trading the samurai sword with that. This one, just one more look at the samurai sword. Remove all the drawings there, and we use it on a 5-minute chart, right? And I'll actually put it for we actually put it for. Let's try the Sydney. In Sydney, we had a break south and a break north. Let's go London. Our London session, break north and break south. How about our New York session? In our New York session, we can see that price just rallied from that. Okay, so very cool. All right, let's look at Bitcoin and look at a higher. Move all the drawings there. Do we have this already set up? Bulls versus bears blank. Yeah, there we go. That's not blank. Move all drawings, right? And go down to the weekly chart, right? So here's a weekly Bitcoin. We're finding some support there. Look at that. We have some tweezers. I said those tweezer bottoms at 57.64, right? And then we bounced up. We got a couple of days of candles. We're still bearish. We're below the 20, the 50, all these moving averages, and the 200. So unless we climb out above that, we're still bearish. But if you go down to lower time frames, the daily, look at that. There's some action going on down there. We do have a nascent baby uptrend, a little retrace. Whether it's retracement will turn into a full-blown trend change we have to get past certain obstacles. We have got the high of 67.377, which is the high of June 15th, 2026, right? And this thing could die right here and keep dropping, right? But we do have a trend, and the trend's your friend till it ends. And right now, the trend is moving higher. If the dollar starts exerting strength again, this is the result of dollar weakness. Okay, this is Bitcoin is going to move kind of like the euro, kind of like the Aussie. It's going to make this move as long as the dollar is weak. When the dollar gets strong, well, then this thing breaks, right? The dollar is in position to have some unseasonable highs, especially with the change in the Fed governor. We've got Kevin Walsh as a new to replace Jerome Powell, and so the picture, the fiscal or the economic picture is a lot different, because before, when we have growth, it's been traditional to raise interest rates. And I think that we're going to see a reversal of that, something that hasn't happened in like 50 years. So we could see what they're banking on is that we can have high growth and tame inflation at the same time. Why? Because the market's becoming more efficient, there's higher productivity, and higher productivity lowers inflation. If you can produce things faster and cheaper, well, then they won't cost as much, right? The problem is that the Phillips curve said that people had a lot of money, they would buy a bunch of stuff, and then the prices would go up. So you have to take the market, you have to choke off the growth by raising interest rates and raising the cost of borrowing in order to weaken the economy to keep it from overheating. We're getting inflation, right? That's been the premise. But now that premise is being challenged, with this new administration. Not so new; it's like almost 2 years now. But they're saying that economic theory is wrong. That we've been doing it wrong for almost 50 years. That we need to have higher growth. Higher growth means, hey, allowing the economy to run. Look at China. They have 13%. They've had 13% GDP and 11%. They had double-digit GDP, and they are not the richest country in the world. The U.S. is. So why are we choking off growth at 3 and 4%, thinking it's inflationary, right? And so we could have a regime where we have low inflation and high growth at the same time, which would change a lot of things. That means the currency would go higher as well, being able to be valued not by interest rates, but just because of productivity and growth, like other countries, right? All right, so we got Bitcoin. I'm going to drill down, and we can see we have some indecision candles there. And it's higher highs and higher lows. We're bouncing off support. I'm actually short-term bullish, right? I mean, we just made a slightly higher high. If you make a higher high, it's like a first down in football. They got 4 downs to make a new high. If not, they have to punt the ball. So that's what I'm. Right. But the dollar starts coming back, though. I would watch the dollar. The dollar is the driver, guys. Keep your eyes on the dollar. And that's another probably webinar that I'll probably do is using the dollar to trade everything else. Okay. Let's look at gold. I like gold. I think gold has been dropping, and it's at 33993. This is, I like it to sell it, right? I mean, this is a bearish triangle pattern, and so I actually took the samurai sword on it this morning, and it's not looking good. It's looking pretty bad, right? And I'll show you where where you can be, samurai sword, like any other strategy, has its flaws too. Let me show you. So this is a New York, and this is what happened, right? Breakout to right. Okay, this is what we got a breakout. I bought the breakout. My stop is 39.72, and as soon as it broke out, what happened? It started to drop, right? Now that I went back and looked at like other rallies and other, I can look at historical samurai swords, right? I go, right, if I went to historicals, right? We can see that every time it fake breaks out, it drops. Fake breaks out, it drops, right? Fake breaks out, it drops, right? So you've got to look at some of the historical stuff too, the samurai swords there. Let me go ahead and remove all the indicators there. So just by looking at this, that we rallied against a rally against let me go back to our weekly chart and remove all of our drawings. And we can see that we are still falling, guys. This is a, you know, like catch a falling knife. Never pet a burning dog, right? 38% retracement comes at 38.40. We probably have more to go to the south side, right? 38% retracement. We broke the low here, that low spike on that we had on March 23rd, 2026. We broke below that, and we're looking at retouching this 38% retracement that we had back in 2025. We could continue to move, even though we've got lots of spike, a lot of buyers stepping in, lots of wicks, right? But they've been unable to push price higher. And usually, if price the lows are the same and the highs are getting lower, that's called like a descending triangle. And usually that breaks south pretty bad. All right, so we can look at the halfback. The 50% retracement is 3,317. And so I could see bulls versus bears. I'm actually bearish on gold. Even though I'm stuck in a long right now, I'm going to honor my stop. Hopefully, if it comes back, we can close it out with a minimal loss. But my stop is already in place, so I just got to take it on the chin. And that's what we do. We let our, we cut our losers and we let our winners run. And I was looking for a little bit of a dead cat bounce here at long wicks there. But you can see that just you're going, you got all red. It's a higher time frame, yeah, and you could get rallies in there, but let's look at the daily. Dailies, like, not giving you much confidence there, right? Right. Look at the green. Let's look. There's more red than green. This is, is a bearish day 4-hour chart. You're dropping, and then you look at that 2-hour, right? And so even though, because again, the premise for buying gold is that gold is a hedge against inflation. We had CPI, PPI numbers, inflation numbers out of the US that show that inflation is coming down, and it's down lower than expectations. And so there's no reason to hold gold if inflation is not eroding the value of gold, right? Or eroding the value of the dollar, right? Now people are just moving into others and moving into other asset classes. And so gold, since gold has a lot of, it costs. You've got to pay for storage, security, insurance, and it doesn't pay a dividend. It doesn't pay interest rates or anything like that. And so we're looking for a move. And Keelan's talking about gold. I'm talking about gold. He needs to watch the video that I'm making right now. Right now. Okay. So we've got the low here. Right. So we, as alerts come through on my video, it's like, not right now, not during this time. Okay. I should have put my do not disturb sign on. But anyway, great kid, great trader. Good job. Okay. So bulls versus bears, we are bearish on gold. And
don't buy, sell.
Right. And so here we go. Moving right along. Okay, we've covered the S&P 500. Let's look at the like NQ. We'll look at NASDAQ. We'll look at a couple of indices too before we go. And let's go out to our monthly chart from the higher time frame. And then here we go. And here we go. We're just we're just stacking highs on the monthly chart. 31,025, an all-time high. We're just hitting these all-time highs. And then we're kind of been moving sideways for the week. For the last 3 weeks, we've been kind of stuck in a range. Our daily chart actually looks slightly bearish, but it's moving sideways. Not making new highs, not making new lows. It's just moving in a sideways consolidation, much like a samurai sword, where we have a consolidation, an accumulation channel, either accumulating of sell orders or distribution, where we have lots of, lower high with lower high, lower low, right? I wouldn't bet against the NASDAQ. I'm saying, like, when you bet against it, it'll just tear you up. I mean, look at this nice run that we have. But usually it does. After I'm making a big run, we have a long line of consolidation. And they always say the wider the base, the higher the race. So we have a long base It was basing, and then we had a high race, and we're maybe doing the same thing, basing before our next leg higher, right? July has a positive bias for trading. It has a great positive bias. However, as we get into August, that's like the worst time of the year for traders. Usually, it could be, I think it could be completely different, right? But seasonally, for the past 50 or 60 years, August has been pretty bad. Bulls versus Bears, I'm still bullish. Nasdaq, don't fight the Fed, don't fight the tape. They would say, okay. Let's look at what ES, the S&P 500 mini futures. Again, we can see higher highs and higher lows. Monthly chart. Just look at this monthly. It's parabolic, just straight up. Boom, boom, boom. Month after month after month. If you bought an S&P futures, I think my daughter did that, and I think she's got some pretty good money coming, right? There we go. Now after this big meaty move, we're getting some sideways consolidation. High of 76.42, low of about 72.37. We do have a high and low consolidation, but bullish consolidation in a bull trend. We could have a pullback, but we're not going to fight the tape. We're not going to we're going to trade what we see. We see higher highs and higher lows. So we would go ahead and go to a daily chart and go ahead and say, yeah, we've got the, we do have a narrowing formation. I would think you're getting short if we broke low of like 7,500. If we broke that, we could come back and retest the lows here at 72.88. But Bulls versus Bears on S&P 500, I am bullish. But you got drop down to your lower time frame charts to find there are periods. A lot of you guys are short-term scalpers too. Look for pullbacks against the trend. Anytime we got a pullback, it's looks like it's a pretty good buy. We're going into Friday. Friday is probably not going to be so hot with profit taking declines probably. Well, let's look at YM. Yeah, the Dow Jones, and it'll go back to a monthly chart. Again, look at this, just straight spike up higher. This higher highs and higher lows. America's back, baby. America's back. We got nice higher highs and higher lows there. Our weekly chart, our dailies high as well. Again, we do have some slowing going into the week, and narrow ranges usually lead to, we go from high volatility, low volatility. We did have maybe a high volatility move and a spike down. Bulls versus Bears, I'm bullish as this as well, right? And so there we go. We got breaking news. Dallas Fed President Logan calls for modestly higher interest rates, modestly higher. They don't want to give it the full cut here because people are very they don't want the market to go crazy. But there's no, with their words out their own mouth, they say that, hey, we're going to raise rates if inflation is high. Well, inflation is low, so you got to do the opposite. You're going to have to cut, right? So that's what we're going to see. Let's take a look at our Aussie dollar trade and see where we are there. We got $1.50 on that, right? There we go. Let's go back to our 5-minute chart. We did our samurai sword trade, and we're up $1.30. Since we put the trade on. Again, we're looking at, this is support, and we have our New York section there, right? Actually, New York we had a drop, but we're probably gonna come back and retest. We had our bearish head and shoulders, a break, and looking for some profit taking, looking to get half back, take a Fibonacci from the top to the bottom, try to get half back of this move. Maybe get back to about $10, risking about $5 to make 10, and that's a pretty good trade. We'll leave that on and sign off. But again, I want to thank you so much for joining me for Bulls versus Bears Weekly Forex Forecast. Come to our free school community and join up. We'd love to have you. And won't cost you a penny. The Pip and Run Trading School or Elite Traders University. I see a couple. I've got people already membership. We have a wonderful Pip and Run trading floor. Come on over, school.com, Elite Traders University. come over to Classroom. We have a number of, if you're brand new to trading, we have the Baby Forex Pips course. We actually have the Samurai Sword course there as well. So if you want to learn more about the Samurai Sword, come on over Pip and Run Trading Floor at school.com, Lead Traders University. Okay. And so with that said, I want to thank you so much for joining. And I wish you all the best. God bless you guys. And check out our $50,000 to $50,000 challenge if you want to learn more about that. Make sure you type samurai or sword in the comments below. And again, God bless you guys. Peace and pips. And we'll talk to you later. Bye-bye.